Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning market webcast. Okay, so let's look at the daily chart. We talked back Tuesday, Wednesday about the just how it was kind of open to go back and test 2,700, potentially try to deal with the weekly pivot as the week went on. And if the bears could potentially put together a couple of directional days, Thursday and Friday, that would help them get next week's weekly pivot dramatically closer to price. And by getting next week's weekly pivot closer to price, it would put them in a better position to turn that number into resistance and try to progress to the downside towards, say, the daily midband. So let me preface this all by saying I think whatever pullback we make here is ultimately going to be a higher low. I think it's ultimately going to be a buy. That said, when you are over 110, 115, 120 handles away from the 45-day pivot for a period of 3 to 5 days, and it's just holding, you get beyond the point of overbought markets stay overbought, because they do. The handles that we've made here is just it's an overbought market staying overbought. I will trade that trend. I will buy those dips all the way through. Oversold markets stay oversold. We'll sell those rallies. We'll sell it and walk away, the whole thing. What's happening now, though, is it's breathing a little heavy. Okay. The ultimate outcome of it breathing a little heavy and getting a little wheezy up above 27, up above, it really hasn't been worth a damn above 27.20. And certainly when it's gotten up into these areas, 37.75, 36.5, it doesn't have anything left. And it bumped into our bet the house areas, not exactly around there, but within 5 handles or so. So it needs to come back. It needs to retest these 200. The 200 on the continuation chart, has been tested as 27.27. Next up is 26.84. That's your 100. So yesterday, they trade down to 85. They come back and they do a double bottom. So the bears continue to fall into the same traps, and the dip buyers are there to take advantage of that stuff. So the bulls are certainly not going away, but they're in a situation now where they're just going to kind of back off a bit. So yesterday was, it's a 17 handle day in the room. We had a really nice short from 27.12. Pulled 19 on that runner, and then the afternoons continue to be a little choppy for my taste. And if it's choppy this afternoon, we're going to be starting our weekend. I'll tell you that right now. We are, where's our week? 17 quarters, 7, 17 and 2/3, 8.5. So whatever the hell that adds up to is where we are for the week. Certainly more than 20, which is our goal. So if we end up in a whippy, choppy market this afternoon, at least as far as we're concerned, we're gonna, we're gonna shut it down. Currently, we are short the roundy. We did a short call last night against 27.03 for subscribers. Most people are in somewhere between 2,700 and 99, somewhere in that area. It did leap up to 99.25 and stop some of us out, I would imagine. I survived by a couple of ticks at 99.75, so we've taken profits on those, and the runner can do what it needs to do into the open. But what's important here as we go into the hourly chart, hourly midband has been resistance. Here, here, here. Started to roll over on Wednesday afternoon. So when you got the big drop, brought it back up, couldn't do it. You get a bigger drop, brought it back. So you can see the lower highs and the lower lows. What the bears need to do now is, they got to deal with weekly pivot. That number's been open to print since midday yesterday, and they haven't printed it, which is not a good thing if you're a bear. So they need to deal with that this morning. They need to trade. They at least need to print it, fight over it a little bit, and then, ideally close below it today. If they can close below the weekly pivot today, that would be a signal that this pullback has a little bit of staying power. I'm going to be very skeptical of it. I'm going to trade it, but I'm going to be very skeptical of it every step to the downside, just as I have been. Simply because when the bears give up that much ground that quickly, I mean, we're talking 23.16 and change Christmas Eve, all the way up to 27.37.75 on Tuesday. That's a lot of ground really quickly, and they tend to stay pretty traumatized after they do that kind of stuff. And the dip buyers just get right back into old habits. So, these pullbacks are getting defended a little bit, but I remain concerned about what's happening here. Really defending 85 to 87. I'll be interested to see if that holds up for the rest of the day. All right, everybody have a good one. We're going live on Instagram at 9:20. We'll talk it up into the bell. We go over all this stuff, and we go over, basically it is a simulcast of what I say to the room before we open every day. So if you want a glimpse into what we do a little bit, come on, join us at 9:20. We've got a lot of really good feedback about it, and we're going to keep on doing it because, frankly, it's fun. All right, take care, trade them well. Talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.